This question is from Crystal. She asked, "What kind of things can you write off as a massage therapist?" Well, there's many different kind of things you can write off, but the main thing is if you are an actual employee, there's less things you can write off. But if you're working for yourself or independent contractor, there's a lot more things you can write off. Let's say if you're an employee, typically, if you do have to buy oil, more likely you don't have to, but if you have to buy oil or clean your sheets, those kind of things, then you can write those kind of things off. Or if you're required to wear a certain kind of shirt, and it usually has some kind of logo in there, if you're purchasing that, then you can use that as a write-off. But sometimes the place will actually give you those kind of shirts then. If you're an independent contractor or you're a business owner, there's many things you can write off. But it gets a little bit hairy. That's why I'm just using a disclaimer right here at the beginning. Make sure you check with the accountant just to make sure. In every single state and cities have different rules and regulations, so don't quote me on all these kind of different kind of things you can write off. But what I'd say is before you start your business, talk to accountant just to make sure. Just to be safe, that's what I did, and I got the lowdown on everything. But again, every single state and city can have different rules and regulations. Okay, so here's some things that you can write off. Um, you can write off mileage. So when you're going to, let's say you're at your place of business, and then you're going to somebody's house to do a chair massage event, or you're going to get somebody a massage at somebody's house, you can write off the mileage, but only one way. You cannot write it off both ways at all. Another option, if you're going to a store to pick up merchandise, you can write off the mileage too. So again, just one way. Some people will put magnets on the car and write off the car, but that gets kind of hairy in a way, so it's a lot easier just to do the mileage. But you have to document it and have a sheet stating where you went, the beginning and starting mileage for that trip then, just for legal purposes. So the IRS, if they audit you or anything else, you have verification, which you actually did. And I don't know the exact amount of how much per mile. I'm guessing it's in the 40s or so, 40 cents or so per mile, somewhere around there. But again, let me know the exact price for that. But other things you can write off are laundry detergent, your sheets when you purchase, also your table, CDs. Here's one that some people don't realize they can technically write off is when you're going to receive a massage, especially if it's a different kind of style or something. You can write that off as kind of education in a way if you want to look at it that way. But you as a massage therapist have to practice what you preach, so you have to get regular massages, but you are kind of learning from other people when you are getting massages, so that's the nice thing about it if you actually pay. Well, most massage therapists is barter, so typically, technically bartering, that is taxable too, so you're supposed to pay taxes on bartering, so look into that also, so that's another option. CDs, stereo equipment, flyers, any kind of advertising, merchandise, you name it. So there's toilet paper. You can even write up toilet paper if you want. Magazines that you're having for the office, furniture that you're having for the office. Um, Definitely, again, any kind of advertising that you are doing, and the yellow page ads, write those kind of things off. But what I did for my accountant, I itemized it. So all this column for advertising, all this column for like electricity, all this column for like rent. So you itemize everything as much as possible. So it's a lot easier at the end of the year. You just give them that information, and then they can then they don't charge you as much. So that's what's nice about it. So when I had my business, my accountant would only charge me around $75 to $100 when they did my taxes, just because I had everything so itemized, so they don't have to go through a shoebox of receipts. And a little trick with receipts, what I did was on the back of it, I wrote the date on what it actually was and for how much. Just because you know what receipts over time they can deteriorate some, and especially if they're crammed in your pocket. But make sure you write on the back of the receipts if possible. It's just more verification. what a lot of people do is you'll have a separate checking account, and you'll even have a credit card and a separate savings account. So you can do those kind of things to make everything totally separate than your own personal finances. But I myself, I paid myself then too, so it's verification that money went to myself. So I paid myself from the business account to my personal account, just again for verification. Let me see what other kind of things to write off. Let's say you're going on continuing education class for a weekend or something, write those kind of things off. If you're having a lunch date with another massage therapist, you're discussing things massage related, you can write off the meal for that, so that's another option. And yeah, I mean, there's so many different things you can write off. But, and any other things that I left out, please leave in the comments below, and it will help everybody else out so we can get a running list of different kind of things that you can technically write off. But again, as a disclaimer, every single state and city is a little bit different rules and regulations, and what you can actually write off then, and every single accountant might be a little bit different too. So one accountant will say this, another one will say that then. So, well, another thing, even like internet, if you're buying a computer for your work, those kind of things you can write off too. So it's just as long as you're using it for work. Or if you have a business out of your home, let's say your business takes up 25%, then you can write off technically 25% electricity, 25% of gas, 25% of your phone bill, and 25% of your mortgage. But when you write off your mortgage, a portion of it, it's really hard because what I've heard is if you're deciding to sell your house, they'll look back at your taxes for the last 5 years, and if you, for the last, let's say 3 out of 5 years at least, you claimed your house as a business, you might get in a different kind of tax bracket, and it might hurt you a little bit. So just be aware of that. Talk to your accountant again. So again, I'm not an accountant. I've only taken one accounting class in the past. I hated it with passion. I know why accountants get paid so good, so I totally appreciate them. I never realized it was so hard until I actually took a class. So again, thanks, and comments below.